All right, picture this. Imagine investing your entire life savings into a booming company. Everything looks absolutely amazing on the surface, right? Their profits are growing, revenue is steadily increasing, and literally everyone around you is saying it's a fantastic investment. But then, suddenly, the company collapses. Just out of nowhere. Thousands of people lose their jobs and millions of dollars just vanish into thin air. Why? Because someone lied in the financial statements. Welcome to today's Explainer, where we are tackling one of the most critical foundations of business, ethics and financial reporting. By the time we wrap up here, you are going to understand exactly why honesty in accounting can either make or completely destroy a business.
So let me ask you a question. It's a bit of a heavy one, but would you rather earn 10 million dirhams through fraud or 1 million honestly? It's a pretty high stakes dilemma. Now, if you ask most people this, they'll quickly say honesty for sure. But here is the shocking truth. In the real business world, a lot of companies actually choose that first option. They choose the fraud. Today, we're going to discover exactly why they make that dangerous choice and what inevitably happens next.
Okay, let's dive right into this. Here is our roadmap for today's Explainer. We're starting with the price of fraud, then moving to defining business ethics, and exploring the ripple effect. After that, we'll look at the accountant's dilemma, protecting the truth, and finally, we'll build your ethical action plan. We'll see exactly how honesty in accounting doesn't just look good on paper, it really is the ultimate foundation of a successful business.
Starting right off with Section 1, the price of fraud. And trust me, the real-world consequences here are heavy.
There is just a massive, dangerous gap between reality and a lie. Imagine a company that earns a real, actual profit of 2 million dirhams, but for whatever reason, they decide to report 20 million instead. So what happens next? Well, based on that lie, investors rush in to buy shares. Banks enthusiastically approve massive new loans. Employees might even celebrate some big bonuses. But the thing is, months later, the truth always comes out. The company crashes and everyone loses. That one dishonest report, that single isolated lie, destroys years of hard work and completely wipes out people's financial security.
Moving on to Section 2, defining business ethics. Let's look at the bedrock rules of how this all works. To truly grasp why these massive failures happen, we kind of need to step back into the corporate classroom for a second and define the absolute bedrock rules of business. Ethics are the moral principles that guide business decisions. Simply put, it's about doing the right thing, even when absolutely no one is watching you. Think about it. Businesses make thousands of decisions every single day. Should we hide these expenses? Should we overstate our profits? Should we mislead our investors? Ethics acts as the compass that answers those tough questions. Ethical businesses tell the truth, they follow the laws, they respect their stakeholders, and above all else, they build trust.
And that ethical compass, it directly guides financial reporting. Financial reporting is basically the process of communicating a company's financial story to the rest of the world. It relies on a few key documents, mostly the income statement, the balance sheet, and the cash flow statement. Literally everyone relies on these numbers: investors, banks, governments, employees, customers. If these numbers are wrong, people are forced to make terrible, sometimes life-ruining financial decisions based on a completely fictional story. Which brings us to Section 3, the ripple effect, because this goes way beyond just the numbers on a spreadsheet.
Imagine you're out buying a used car. The seller looks you dead in the eye and promises, hey, this car has never been in an accident. But later, you take it to your own mechanic and discover the vehicle was secretly completely damaged and just patched up to look nice. Would you ever trust that seller again? No way. Well, businesses work exactly the same way. Financial statements are promises. When companies break those promises and lie about their financial health, trust just disappears completely, and the damage ripples out to every single person connected to them.
Let's look at Section 4, the accountant's dilemma. What actually happens behind closed doors? Let's walk through a scenario that happens behind closed doors way more often than you might think. Put yourself in the shoes of a junior accountant, and you're facing immense pressure from upper management. What would you do if your boss asked you to hide losses by simply moving some expenses to next year? They might say something like, just shift these numbers a bit, it'll make this year's profit look better. Literally no one will ever notice. This is a massive test. Real professionals actually face this exact situation. And ethics means choosing honesty, even when your boss is pressuring you and even when it's incredibly difficult.
When people fail that test, we see some catastrophic ripple effects.
Take revenue manipulation, for example. That just creates a total illusion of false growth. Hiding expenses, that gives you fake profitability. Inventing fake assets or falsifying inventory totally misleads your investors. And bribery or trading on insider information, that invites massive legal risk. Make no mistake here, every single one of these actions directly damages corporate trust and basically sets a ticking time bomb inside the company.
Okay, let's pivot a bit to Section 5, protecting the truth. Let's talk about keeping the business world honest. Thankfully, it is not all doom and gloom. There are heroes and really robust systems designed specifically to keep the business world honest. We have internal accountants keeping the books straight, external auditors double-checking all the math, government regulators enforcing the law, the board of directors providing oversight, shareholders holding the leadership accountable, and professional accounting organizations setting the standards. It's this massive, interconnected ecosystem of diverse groups, all working together to maintain accountability and trust in the financial system.
And when those protectors succeed, the benefits of ethical reporting are just incredible. Businesses gain unshakable investor confidence, a much higher reputation in the market, and they actually attract better employees. It leads to sustainable long-term growth and significantly lower legal risk. So if you take away one thing from this explainer, let it be this: ethics isn't expensive. Fraud is what's truly expensive. Finally, Section 6, your ethical action plan. Let's get into some practical takeaways. We've talked a lot about the big corporate scale, but let's transition to some practical advice for your own career, or if you're a student, your upcoming exams. Here are 3 super practical steps to guarantee you stay on the right side of the line. Step 1, always tell the truth. Just never manipulate the numbers to make things look better than they actually are. Step 2, follow the accounting standards. These rules exist for a reason, to ensure fairness and transparency for everyone. And step 3, think long-term. Quick, fraudulent profits, those vanish overnight, but a good, honest reputation lasts an entire lifetime. Oh, and if you are prepping for an AP exam anytime soon, you'll definitely want to lock this into your memory right now. Ethics doesn't just protect the abstract concept of a company. Ethics protects people. It protects investors, employees, customers, and society as a whole. Honesty builds trust, and that trust is the foundation that creates long-term success for everyone involved. Profit can be rebuilt. Trust is much harder to rebuild. Choose integrity. Remember, businesses don't fail just because they lose money. They fail because they lose trust. So when you eventually find yourself behind closed doors facing an impossible choice, will you choose the easy lie or the hard truth? Thank you so much for joining me for this explainer, and I'll catch you in the next one.